Today's date, 3/24/2019. Yes, you heard it. It's a Sunday. What I am bringing up is a daily chart on Amazon.com. And we had a big, beautiful downside on Friday when it dropped $54. That meant that the $1,800 puts went up about 200 and some odd percent. And there it is now on Amazon. It's right here. So let me do one thing. I'm going to go ahead and blow it up. Okay. And we trade Amazon daily because when you're in there making a market with the options, you have to have a big point swing. But this was the rally that we had. Very impressive rally off of this bottom here and whatnot um, in 2019. And I'm going to just show you that when this breakout, you had the support right through here and whatnot. And then when you come up off the low of this breakout, it goes just like that. And then this is Friday's big reversal. So basically, we hit the top of the trend channel on Amazon.com, and it was time to get short Amazon, buying put options to go down. One of the things that we would like to highlight here is that 200-day moving average, which is the green line, that's at 1732.7. That blue line is rising. It's going up that 10-day moving average at 1731, and it is. And this is the key. We're above all the moving averages. Yes, we are a little bit overbought, but it's a daily trading machine. And one of the things I'm going to say is that high right there was 1823. This big downside, that low was 1763. And we started out with 1818 on options expiration Friday, 3/22/2019. And we're going to be buying the dip because we have the support levels. So after we have such a great breakout, it's healthy for it to pull back and whatnot. But trading the call side, trading the put side, this is just a wonderful thing. And yes, we are overbought, but it pulled back. When it hits support, it's going to be strong, super strong. Amazon weekly chart. Now, listen, the white line is a 50-week moving average, and when we got above it, that's when the bigger part of the breakout. That was at 16.99. We had resistance before. We would come up to this 50-week moving average, and it couldn't get above it. But on Thursday and then Friday, we broke above that 50-week moving average, and that's at 16.99. That 40-week moving average is at 17.26. That's the blue line. And then, of course, the bullish part of it for the short term was this weekly consolidation breakout and made the all-time highs. And we came up and we hit a wall of resistance. I'll bring this trend line down just a little bit more so that we will keep. What we're going to do is we're going to set that trend line right here where we had that 2018 drop. And this is that weekly consolidation. We broke it out. We do have another area where that wick is. That's going to be this area over here of where it had broke down in 2018, 2019. I can just say one thing. It's a very strong trend, and pullbacks need to be bought. What I have right here is a $1,760 call chart on Amazon. And we all know that you people like to trade options, never seen a call or put chart, let alone knowing how to use it. We peaked out and we got totally inflated, man. I mean, this was a great run beyond a great one. It was great. I mean, that thing just shot right up there. It got inflated. When they get up here, they can't stay here, nor will they be able to mathematically. Never happened. So when it was inflated, what ended up happening is, I'll go ahead and show that right now. The high of this contract after a 4-day run, I mean, you want to talk about a 600% return? Listen, this was $70. What we were over here on 315, the contract was $8. 5 days later, if you'd have been here with us, that was $70 on the high. Now, on Friday, options weekly expiration, you had a low of $28, And this expiration, like I said, I'll show it to you so you can clearly see it. This expiration is March 29th. It's a weekly contract. That contract closed at 68. It got slammed down to 28, and we're going to get ready to buy it all over again. And let me just show you the other part on the opposite end was the 1760 put, which was out of the money now, was way below that market. And it was. And it got down to $7. And it made a high of 23.80 on Friday. That was the $16.40 range on that out of the money $1,760 put. And so this side was deflated and it was going to go up. Once again, here's a 1780 call. Yes, you can see it, $31. This is why we trade this thing every single day of the week. We're a market maker. It was $31 moved. It was 51.25 and it got slammed down right here to 1880. Once again, this trade was totally deflated down here at the bottom. And the other side I just showed in the video was way up there at the top. So we always come down and buy this. That's rule number one. Because it's deflated, they took all the premium out, stock is going to have a healthy pullback. I can tell you the low on this 1770 and 1780, so we'll go with that 1780 put. You had a low of $18.80. The high was 50. This was expiration weekly Friday, and we will continue to trade Amazon both on the call side and the put side and make it a market. Once again, it was a low of 1180 on Friday, and that is the put chart, which was out of the money, and that was a nice trade with 1,285 contracts were traded on Friday on the 22nd. So once again, I'm going to go ahead. Trading ranges are trading ranges. Daily chart, once again on Amazon, big reversal. It's going to come down and hit that 200-day moving average or this lower end of the trend line. It will bounce like a rocket off of that sell. So when the volatility came back in and Amazon went down a lot, and 6.3 million shares, 71 highs and 395 lows. This is what happens when you get a big breakout. They got to pull back. So whenever it hits support, we'll buy the call side. If it's a lower high and then a reversal, then we'll go on the put side. Let's get paid together and let's get paid when? Now.